Welcome, dear friends. This is the first video of a new little series I would like to start. I call it Table Topics. In a nutshell, what I will do here is, because normally we have either live trades or live market analysis or market overview, all the educational videos. So these videos here, they are also educational. The content of the video course from the website will not be included here, but the public content will be included. And what I will do is I will elaborate on certain topics. So it's not that there's like particularly new information that gets presented in those videos here. It's more like a repetition of concepts which have already been explained in general terms and also demonstrated live. Okay, but just to complement also the live analysis videos, and for the ones who are currently studying the market causality, which now is a new group, this may help also to understand the concepts looking at live charts right now. So the first table topic session here I would like to dedicate to the subject of a contradicting market structure. So here you see euro pound on an hour chart, and so allow me to give you my take on it. Yeah, so the price came down, it went below this consolidation zone, but now we have shorties coming into the market trying to sell euro pound. We have shorties being in profit, but at the same time we also have the beginning of a squeeze as well as stops below the price. What do we do in such a scenario? You guessed it, we stay away. Okay, I personally certainly will skip any such scenarios where the structure has contradictions, because the truth is, ladies and gentlemen, that these are scenarios where the smart money plays its game and we cannot compete with them, because the bias is not strong enough for us to place a trade and risk capital. If, however, we had the same scenario, we wouldn't have all these stops below the low, and we would have had the beginning of a short squeeze, then I would have considered to buy a reversal up, which would be an advanced trade. But because we do not have that, instead we have longies also coming into the market, I will certainly not try to trade a reversal here. It won't work in many cases. And something I explained today in a private session, it's better, if you ask me, to be very puristic in your trading. Stick to the setups where everything aligns and is clear and you have a definite edge and you can take pips out of the market. Skip situations where there are too many contradictions or certain factors do not line up as you want them to. Okay, I know every trader is a little different. Some traders, they like to also trade setups where there are many minus points on the checklist, so to speak. If they use a stop and they don't risk too much, that could be fine, but for the majority of people it's better to really concentrate on situations which are very clear, where you know that in the vast majority of cases the trade will make you pips and not bring you any stress. Okay, I'm very radical, so if I wait for a setup like this and I see, okay, the price comes down, I have shorties, I have a good chance of a reversal, but then there are those stops below the price and overall longies increasing into the market, and news in the way and so on. This is not good enough. Okay, and when you analyze my live trade videos, I only trade if things clearly align. But it's important that I explain this point here, because obviously many times you look at the charts and you see too many minus points and you need to decide, okay, I will not trade. Okay, so to summarize, this now is a great example for a market where the market structure suddenly has contradictions, and it's not acceptable trying to place a trade with those significant points against your trade. So we skip it and look for a better one.